Hey, welcome back. Today's episode is for all the beginners out there who are curious about diving into the world of investing. We're going to talk about investing in the stock market, breaking it down step by step. So, if you're new to investing, stick around, this one's for you. First things first, what is the stock market? Simply put, it's a place where buyers and sellers come together to trade shares of public companies. Investing in stocks means you're buying a piece of a company, and as the company grows, so does the value of your investment. Now, let's dive into the basics of how to start investing in the stock market. Section 1. Understanding your financial goals. Before you start investing, it's crucial to understand your financial goals. Are you saving for retirement, a major purchase, or just looking to grow your wealth? Knowing your goals will guide your investment strategy. Section 2. Building an emergency fund. Before you invest, make sure you have an emergency fund. This is money set aside for unexpected expenses. Having a safety net ensures that you don't need to dip into your investments in times of financial urgency. Section 3. Educating yourself. Investing can seem intimidating, but it's essential to educate yourself. Understand the basics of stocks, bonds, and mutual funds. There are plenty of online resources, books, and courses that cater to beginners. Section 4. Risk tolerance. Assess your risk tolerance. This is how comfortable you are with the ups and downs of the market. Generally, younger investors can afford to take more risks, while those closer to retirement might prefer a more conservative approach. Section 5. Choosing a broker. To invest in the stock market, you'll need a brokerage account. There are many online platforms to choose from, like Robinhood, E-Trade, or Fidelity. Look for one that aligns with your needs and has a user-friendly interface. Section 6. Building a diversified portfolio. Diversification is key to managing risk. Instead of putting all your money into one stock, spread it across different sectors and industries. This way, if one investment performs poorly, others may offset the losses. Section 7. Dollar cost averaging. Consider dollar cost averaging. This involves regularly investing a fixed amount of money, regardless of market conditions. This strategy can help reduce the impact of market volatility on your overall portfolio. Section 8. Long-term perspective. The stock market is unpredictable in the short term, but historically, it has shown long-term growth. Adopt a long-term perspective and avoid making impulsive decisions based on short-term market fluctuations. Section 9. Monitoring and reassessing. Regularly monitor your investments and reassess your portfolio as your financial goals evolve. Consider rebalancing your portfolio to ensure it aligns with your risk tolerance and objectives. Section 10. Patience and discipline. Lastly, investing requires patience and discipline. Avoid making emotional decisions based on market fluctuations. Stay committed to your strategy and stay informed about your investments. So, there you have it, a beginner's guide to investing in the stock market. Are you ready to take the plunge? Let me know in the comments below. If you found this video helpful, give it a thumbs up, and if you have friends who are new to investing, share this video with them. Until next time, happy investing, and I'll catch you in the next one. Bye for now.